Good afternoon, everyone. This is Corey Hinkle here, and I'll be your host today for the Ankerstar Wealth Daily Update. We've got a few very interesting topics. We've got a big market update, some trade negotiation updates between the U.S. and China, and then finally where I think the market could be headed next as things have unfolded in all of the tariff drama we've seen. All right, let me share my screen here. And we'll get started with the U.S. and Chinese officials announcing that they've struck an agreement to pause most tariffs and other trade barriers for the next 90 days. Sorry, it took me a second to get this shared. In this announcement, President Trump mentioned in his comments that China agreed to open after the two countries came to this agreement. He said that China opening to America, I don't know exactly what that means, was the most important thing to come out of those trade talks. I will say this, we know that China hasn't allowed many or hardly any of our big tech companies to benefit from their market. I don't know if he's implying there's some potential for that. Obviously, that would be a game changer for some of those companies. We'll have to see. As an American, I'm hopeful that the progress is better. The progress and outcome is even better than my imagination can come up with, and that would be great for the entire world. There was a expected surge in freight shipments. So because of this deal, and you saw many freight companies such as Old Dominion Freight Line be some of the market leaders today off of this news. Okay, I wanted to show you, and I don't do this too often, but I did want to look at a chart, and I wanted to speak to what is the chart kind of telling me as a market participant. So first, I actually want you to come back here and look at November of 2023. That blue line that's sort of steady and squiggling across the screen is the 200-day moving average for the S&P 500. It's an important moving average. It gives us a lot of information around whether or not the market is in an uptrend or a downtrend, or how if the market is extended above or extended below that uptrend. So there's a lot we can gather from that. But you'll notice back in November of 2023, everyone's aware of this, and the market is aware of this, and the market makes decisions around this moving average. So in November of 2023, when the market decided, that was at that time, if you were a market participant then, you probably remember there was the release of ChatGPT for the first time. AI was brand new. And AI still seems kind of brand new these days, but back then it was actually brand new as far as the market goes. And the market decided, yes, we are going to move above this moving average. And the market did what's called a gap above the moving average. So the market didn't open where it was trading the day before. It opened far above and then traded even higher. Now come look at today. You can see the market was trading over 1% below that moving average. Today, it gapped well above that moving average and is set to close near the highs of the day. So we're seeing just incredible strength. What's kind of interesting to me about that scenario, so when you get a gap above that moving average, we can all see that it's very bullish behavior. It's very positive behavior from the market participants. And it typically indicates that things are not done going up. However, this entire move was so fast and so aggressive, intense, that you do wonder as a market participant how much energy, right, did the market use up just to get back to this moving average and now back above it. So it's bullish behavior. Does the market have a lot of energy left to go higher from here? We'll see. I do want to share with you what I think could be the potential outcome here. Mike and I looked at this chart last week, and it mentions what happens after 20% drawdown in the S&P 500. And we were giggling and laughing that the current environment is very reminiscent of 2018 when Trump was president, there was tariff drama, and there was some disputes going on about rates and Fed Chair Powell. We're tracking pretty closely with that. And, you know, the outcome, if we really did track that outcome throughout, you know, the next year or so, the market would probably be, the S&P 500 would be about at 6,700, you know, sometime next spring. And valuations would be stretched if that were to play out. But unless earnings are just significantly hotter than expected. But I'm kind of leaning towards that being a sort of a base case assumption at this point. The market does go up a majority of the time. You know, there's a potential for what if the China news does get a little bit better? The deal isn't signed yet. What if we get some tax legislation and or an extension of that element? So, you know, there is still room for good news, and I wouldn't be surprised if we do see a similar trajectory as the 2018 trajectory, which ended with a 40% move off of the lows, and a 40% off the lows for us would end up with the S&P about 6,700 or so. So good news today. What a rally. I mean, look at that gap higher. I hope everyone's having a great day, and we'll be back with you tomorrow.